Investors and traders, welcome to the channel Market Chart Bet, and today is 3rd of January 2024, and the second day of trading has concluded today, and I hope everyone's having a great day so far today. So in this video, we are going to do a recap of the trading activity today and some pattern analysis. It's going to be a brief video. I'm not going to go into the details of the patterns. You can watch the older videos, or over the weekend in the longer video I'll cover most of that. So as usual, this video is for educational purposes only, and it is not a financial advice. So we'll just do the macro things, like we'll take a look at the bonds, we'll take a look at the dollar, gold, silver quickly, and the US stock indices and the individual stocks. I will be doing a separate video today. We need to take a look at Apple, for example. Okay, so just a quick recap to see how the trading went today. So starting with the bonds. The bonds were unchanged to very little activity. As you can see, the ZN, which is the 10-year Treasury note, almost very little activity in that, but still a positive close. That's a change from yesterday. The bond, the 30-year long bond futures, you can see open and close the same, just no activity. But intraday, it's not like that. We'll take a look at the chart in a while. And then taking a look at the US dollar. Again, the dollar was stronger today, but not as strong as yesterday, but pretty strong. And then we have seen the declines in the Euro USD, USDJPY, the Japanese yen was much weaker and the dollar was much stronger against it. We can see it in the percentage by 0.92%. And the GBPUSD, surprisingly, compared to the Euro USD, it was actually stronger, so it closed in the positive territory. Gold, this is where the action was today. Gold actually closed lower, so lost about $18, so it's minus 0.87 percentage points. Silver was also much weaker than the gold, lost minus 2.89%. Taking a look at the US stock indices, so we can clearly see the stocks closed in the red. This is something which we were also anticipating yesterday, because yesterday we had the bonds being lower as well, which was an indication that selling pressure was going to come in, most likely for these stock indices, and also the dollar was firm, which is kind of a recipe that perhaps today was also going to be not a positive day for stocks, and what we have seen so far. But the good thing is that the stocks are, the indices are within the trading ranges we were expecting per the standard deviation model that we were taking a look at. So just a quick recap. This is the S&P 500 cash index, lost minus 38 points, or 0.8 percentage. S&P E-mini futures contract, pretty similar, minus 39.75 points, or minus 0.83 percentage. NQs, they were a percentage minus 1.13, lost about 189 points. And today, compared to yesterday, the Dow was also much weaker, lost about 278 points, or 0.73 percentage points. And Russell 2000, this is the weakest of all. Look, it lost 54 points, or minus 2.69 percentage points. So we'll take a look at these indices quickly. Okay, let's have a very quick look at the bonds. So this is the 30-year bond futures chart, and here what we can see is, look, let me actually take a look at the intraday 15-minute chart, just to take a look at this activity. And you can see that although the day closed unchanged, but there was quite a bit of activity during the day for this, and really the buying came in pretty much quite towards the end of the trading session. And we are looking at the electronic charts for this. This is not the regular trading hours, it's electronic trading hours. Then let's take a look at the dollar index. So here in dollar index, we can see that again a positive day for the dollar. However, some selling came in, and the key point that I wanted to highlight was this. What the dollar index has done is it's gone and filled this gap, and I don't think this gap was because of the contract change. I'm not 100% sure, though I'll double check it. But anyway, what I really wanted to highlight was that it's done a 50% retracement of this entire swing, high to low here, this one, and right here at this bottom of this candles wick is where it found resistance today. So there is a likelihood, there's a chance, excuse me, the US dollar could actually find or begin to find some resistance or some profit taking seller, whatever you want to call it, come in tomorrow's trading. There's a chance for that. And also Friday we have the non-farm payroll, so always a big economic indicator and a lot of volatility, especially in the currency pairs that take place around that time. So Friday is going to be really key. And now let's take a look at gold. So this is the gold futures contract here. Again, what we can see is that from the 61.8% retracement of this swing, let me actually try drawing it for you so it's easily yeah, this is the swing. It's just been going down, lost quite a lot of points today, and where it is now, let's take a look. I believe it's between the 50% and 61.8% retracement, yeah, in between that. So it might be reaching, if it reaches the 61% retracement, it's about yeah, about $19 lower, quite a bit. That should be pretty good support here, and also coming in from the structure right here. So we'll just wait and see, but the gold price action was pretty disappointing, and of course in silver, silver is down a lot today. Let's take a look at now the indices. So SPX. So again, SPX is finding resistance right between this. It just went a little bit above then the 1.272 expansion. So whether it's able to actually complete this pattern, we'll have to wait and see. But the key thing is that the cash index has not taken out this high, but in the futures contract it did. Let's take a look at the ES now. So this is the S&P 500 E-mini futures contract, and here the price action again, not very positive in today's price action, but the key point that I want to highlight is this point here, 4730 level. That is the 38.2% Fibonacci retracement. If we take the swing low here, it's difficult to take this swing because the move has been so strong. But if we were to just take that, we have 38.2% Fibonacci retracement coming in here. But most importantly, if we just take a look at the weekly chart here, we just go back and take a look at our weekly levels. We have the -1 standard deviation coming in at 47.29 and 3/4, so roughly 47.30. So we'll have a confluence of two things coming together. This is why I would like you guys to pay attention to this 47.30 level. This is where maybe perhaps there's a chance some decent support might come in, or the market actually might touch this, and we'll be watching this point as a potential support level for tomorrow's price action, and we'll see whether it's gonna hold or whether there's gonna be more selling, which might actually take this index towards the -2 standard deviation level, which is lower than this one, which is the first standard deviation level. And now let's take a look at the NQs. There we go. And here it is moving, it seems to be moving towards this 50% retracement level. Just from this little swing, is even hard to call this a swing, but if we were to just take that, and the key thing I wanted to highlight was, we discussed this yesterday as well, we were thinking there was a chance it could reach this 17,250 level, but maybe it might still do, but it came pretty close. And now where we are is just, let's go back to also our weekly chart and take a look at yeah, so it has broken below the -1 standard deviation. It's above the -2 standard deviation levels. It's just in between that zone now. Now there's a chance that it could fall a few hundred points more, maybe even breach intraday the -2 standard deviation level. The 38.2% Fibonacci retracement is very low. It's about 16,000. I'm not sure if it's gonna get there, but there's gonna be a pretty good chance that some decent support comes in around the 16,417 level or thereabouts. Is something which we'll be watching for in the price section for NQs. Now let's take a look at the Dow Jones. So Dow Jones, we talked about this ABCD, big ABCD pattern, and yeah, the price has just gone nowhere, and today it took out the lows of yesterday. That's not very positive. So could this be in the making of a bigger high? There is a chance, but it's not confirmed yet. Till this swing is taken out, we can't even call it a double top because it's just not confirmed. So what we are looking at is in terms of the standard deviation level, just going back to our weekly charts. Here we go. This index is stronger compared to some of the other ones we have seen, and here the -1 standard deviation level is 37,313, which is an indication that perhaps there is more downside to this, but there is also possibility that if the other indices they begin to hit their standard deviation level, it might not get there, but it is getting close, and we have certainly seen selling pressure coming in this index. Now let's take a look at the Russell 2000. This is the most interesting one because this is the one which has been the hardest hit as well, and what we can see is that this index is actually approaching its -2 standard deviation level, which is around 1974. We are looking at about 9 or 10 points in this index. It is likely that it might actually reach these levels tomorrow, because the selling pressure, if selling pressure comes in, and then the 38.2% retracement of this entire swing low to high is around 1922. Something we were discussing was that this index has been in a trading range for a long time. It took this much time to just get above this trading range, trying to break out of it, and it might just be a pullback right into this trading range, and there's also a chance it might be more, something more. But for now, we'll take things one thing at a time, one level at a time. And right in the beginning of the week, these were the levels that we had put together, and so far the market seems to be pulling right into these levels. So this is what we are watching, and we'll keep on watching, and I'll do daily videos, really quick recaps to keep you guys updated. So thank you very much for watching the video, and if you like our analysis, then please think about subscribing to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted, and if you like our analysis, then please do like the video as well. Thank you very much. Good luck and good trading.